Welcome to Staying Ahead of the Curve. I'm Jeff Snyder with Camac Retirement Group, and this segment is Ask the Consultant. Joining me now is Jeff Morrow from MassMutual Retirement Services. Jeff, the floor is all yours.
Great, Jeff, thank you. I want to start with a question on consolidation, specifically Recordkeeper Consolidation. There's been a lot of merger and acquisition activity that we've seen. Just curious about your opinions around whether you see that trend continuing and how that's impacting your conversations with plan sponsor clients.
So I think the short answer, Jeff, is that we would expect consolidation to continue. You know, record keeping is a low margin business, and it is all about scale. And so if you have the more participants, you can spread your costs evenly across your participant base. And so it certainly favors the larger record keepers. That being said, there's still opportunities for the smaller record keepers, those with less participants, to tactically go after certain parts of business. But for the most part, we would think that there would be some record keepers that would look at the current environment and say, hey, now's our time to get out of the record keeping business and let's focus on distributing our product. So that product could be asset management or, for example, stable value or fixed annuity options.
We've seen a trend continue towards providers, the number of providers being reduced. Just curious about your take on not only where that trend will go, but what you're seeing maybe as a difference in the different markets, if you're seeing a difference at all.
Sure, I think consolidation is certainly a trend and it will continue. It exists. It had really happened and occurred over the last decade or so in the 401k and the governmental 457B marketplace, where the majority of entities or sponsors utilize one record keeper. There's still some entities that still use multiple, but for the most part it is single vendor, and that's for a lot of reasons, which I'll get to in a minute. In the 403B market, this is a relatively newer market in terms of actual movement towards consolidation. And we had new regulations in 1109, effective 1109 from the IRS, that essentially established governance process and fiduciary responsibility for evaluation of record keepers. So if you're in today's environment, if you were looking at a fiduciary and you're evaluating your capabilities of your vendor, you're saying, well, why do I need 5 vendors or 10 vendors or 20 vendors all doing the same thing, tracking participant accounts, servicing participants, having a call center or a website? It's really duplicative. And anyone who knows basic economics understands that if you pull assets together, you're going to get a better deal. So in today's environment, whether it's a 401k, a 403b, or a governmental 457b, you have access to a broad range of investment options. So you have access to any mutual fund virtually on a platform. So therefore, it may not make sense to offer multiple vendors.
Outside of the obvious benefits, those that you just mentioned, are there any obstacles that you're seeing in the marketplace that are challenges for plan sponsors looking to reduce vendors?
Sure, I think there's a lot of challenges. I think one is the often objection is removal of choice in investments and choice of this record keeper. And I think I covered those previously. I think the other objection is some of the fixed annuity products pay a higher crediting rate, and that could be for a lot of reasons. It may be because there's a higher fee charge to plan participants, and that's kind of baked into that higher crediting rate allocation. The other one that I think is important and hard to overcome is the relationship objection. If I'm working with an outside advisor, and that advisor is someone that I've learned to trust and have confided in and gone to, and they've helped me for 20 years, it's often hard to just wipe your hands clean and say, I'm done, I can't work with you anymore. And so, but there are ways around that. And one way is when you're writing an RFP, to allow for the existing advisor, provided they're willing to accept the opportunity, to partner with the successor record keeper or record keepers to get paid from the participant account. And there are mechanisms, there's infrastructure that exists at a lot of record keepers to do that. So I think these are all common objections, but with a thoughtful, deliberative process that you go through, issuing an RFP, writing an RFP, issuing it, evaluating it, and considering all the options, it kind of leads you towards potential consolidation, and you can figure out ways to overcome these barriers to change.
Well, Jeff, it's been very insightful and helpful. I appreciate your time answering our questions, so thank you.
Jeff, thank you so much. And thank you very much for watching.